Welcome to my next edition of Technical Tuesdays. It was suggested to me that I run over the failure of the head and shoulders pattern that I'd spotted in the Euro US dollar. Not only me, but practically everyone else who's ever looked at the Euro US dollar spotted this pattern, of course. And I think that's half the problem. I made a video for my regular subscribers talking about this, and it seemed like a topic that was worth discussing further. So when a pattern is so obvious and so well recognized by the social media world, this never used to happen, of course. In the old days when I was a trader, you'd see a pattern and it would work quite regularly. But more recently, I've noticed some sort of phenomenon when there's a really obvious pattern, and it's all over Twitter, it's all over stock tweets, it's all over the sort of trader community within social media. It just seems that these patterns don't work anymore. This Euro US dollar was a very obvious head and shoulders pattern, and as I say, the whole world knew about it, and it just failed. We dipped below, but it really couldn't get any momentum to the downside, and then pushed up through here, and it's obvious all the shorts are now stopped out of this. Whether we do head lower, I don't know. It's certainly possible, but there's no pattern to indicate that, although there is, if you put a trend line on here, I guess. Well, it's all a question of whether we now hold above this area. Of course, you can see the intersecting trend lines. We are dipping below the 100-day moving average. I know this is a bit political with what's going on in the German election situation. But anyway, I thought I'd bring that to your attention. Also, on the dollar index, of course, looks a bit like a mirror image of the pattern we just saw on the Euro US dollar. And again, this pattern failed. Now, this is a little bit more interesting than the Euro US dollar, because although this pattern failed, and I do believe that a lot of it was to do with the fact that the retail market is out there all buying into the dollar index, and it's just too easy for the big guys to push it down, squeeze them all out, and then let the market take off. And I've got a feeling that's what's going to happen now. I've got a feeling that the failure at this neckline has now pushed all the retail traders out of this trade. They're going to forget about it. But we're getting quite a positive moving average cross situation here. We've got a good move up yesterday from the 100-day moving average and the 55-day moving average, and it would just be typical of this sort of scenario where the big guys have pushed out the little guys, and then the big guys just take the market straight up. So watch what happens there, but that wouldn't surprise me at all. So let's look at some patterns which were less obvious and less talked about that did work. This is dollar yen, and this goes back to 2015. And you can see here it's a fairly clear head and shoulders pattern, but it's just not as clear cut as that Euro US dollar. In fact, the left shoulder is very small. I wasn't even sure this was a head and shoulders pattern. Anyway, left shoulder is very small. There's your head, quite extended. And then we've got a very odd, certainly non-symmetrical right shoulder here. But anyway, there is a strong argument for this being a head and shoulders pattern. And I do know someone that did trade this and did well out of it. I didn't actually trade it in the end. And this bounce off the neckline was confusing. Anyway, when we did finally break through the neckline, you got the confirmation that this was a head and shoulders pattern. As I say, much less obvious, much less talked about on social media. And look what happened. If you'd held that for the next few weeks, there was some serious profit in that trade. And this brings me on to what we've just seen. Okay, so this is a bang up-to-date chart from September 2017, so this is about 2 months old. Now, we had a really good run up here, and I did spot this head and shoulders pattern for my subscribers. Clear left shoulder, head, and a very small right shoulder, which is fine, doesn't have to be symmetrical. And this was a pattern that was worth trading. As I say, 4-hour chart, much less talked about, not spotted, not all over social media, and the pattern did work. We did break lower, and we did see a decent move, and actually we hit the target perfectly. I used the Fibonacci's here for my target, 38.2% target of 111.90.89. Once we'd broken the neckline, you can see we broke this neckline, which was just above the 113 double. There you go, 113.12 was the neckline. So there was some decent profit potential in it, certainly 120 pips, more than worthwhile trading that pattern. We even got a second opportunity, dip, and then up to the neckline, and then you could sell it again. So really, textbook pattern here, looked really good. We'd actually got a moving average crossover to confirm some negativity. We hit this target and support, which actually I've had my subscribers buying into. I actually bought into that as well. I think I even threw that trade out over Twitter, so it was a free bit of advice to anyone that follows me. And again, trades work really nicely, so I'm looking for us to go back up to at least a 13.00, 113.20 area on this bounce. Okay, so just to wrap up, it's just my thoughts that these very, very obvious patterns that everyone is talking about and sucking in all the retail traders, they don't work so well. The retail traders get caught out. So I would be more careful with those. Look for the more obscure ones, the ones that people aren't really spotting in such great numbers, and see if they work a little bit better. It does scare me when I read like the Commitment of Traders report or any report indicating that there's a particularly long position in this or a particularly short position in that. It does, by speculative long or speculative short, it does make me very wary of joining that large speculative number, because sooner or later you do think they're all going to get squeezed out of their positions. And this is the same. This is along the same sort of lines. Everyone's spotting the same trade. Everyone's spotting the same pattern. We're all going the same way. And then once all the retail traders are in, there's no one left to push the market in the same direction, and they all get squeezed out.